Hi, good morning, and welcome to today's edition of Market Analysis for today, October the 3rd. I'm Giovanni Benecourt, analyst and trader educator with Vantage Markets. Boy, do we have a new quarter. Well, it is the start of a new quarter, but all fears and uncertainties and some fresh ones are keeping markets in an anxious state. The S&P 500 and the Nasdaq notched a third consecutive quarterly loss on Friday, the longest streak since 2009. Now, comparisons to 2009 will understandably do nothing to ease investors' nerves, but there's more. Credit Suisse efforts to reassure investors about the bank's stability didn't help as the shares slumped to a new low today. The UK, which has provided perhaps the clearest example of market jitters of late, also remains in focus. The government scrapped plans to cut tax for the country's top earners early today, after criticism amid the deepening cost of living crisis, and the pound rallied to 1.12, up from a record low of 103 last week. Back on American soil, Tesla stocks set to begin the quarter in reverse gear. The electric vehicle maker missed third quarter delivery estimates. So they delivered 344,000 vehicles. The company said it is becoming increasingly challenging to secure vehicle transportation capacity and at a reasonable cost. It is a worrying reminder that supply chain problems are still having an impact. There's still two more Federal Reserve meetings during the new quarter. Whether the central bank pivots from its aggressive rate hike path is a key question that everyone would like answered. The U.S. midterm elections are on the horizon, which, historically speaking at least, could offer investors some hope. The S&P 500 has climbed in the 12 months after every midterm election since 1942, according to Dow Jones market data. With myriad factors in play, including the strong dollar, inflation, and supply chain issues, that streak could be in jeopardy. Now, all four U.S. primary stock indices formed a tight and relative rare six-day balance area into Friday. That will lead to a sharp break. The S&P 500, the Dow, the Nasdaq closed on their lows, and most importantly, also closed below their balance areas streams. The Russell also closed on its lows, but did not break below its balance area extreme, and this will soon be resolved. Now, I think we continue the downside washout that appears to be gone on Friday, or we are going to immediately reverse and scream higher. Now, if the bearish scenario plays out, the Russell will continue lower immediately and confirm the breakdown on the other three. Also, there should be little, if any, retracement into Friday's range by any of the indices under a bear scenario. If the indices can't sell off from here, a potentially significant low may be in place. Now, let's take a look at a 2008 analog. The market in 2008 the 2008 market has become a popular analog. If it is to hold, we're going to sell off very sharply here this week. Now, levels matter, and what happens around critical levels are always important. The indices are at critical important levels right now. So let's take a look at the Dow and the Russell, which are trading below the pre-pandemic high. That means we are trading right here. Here is a pre-pandemic high, and we're trading below it by not much, but we are trading below it. Okay, so if history repeats itself, all right, and that is one of the nemesis in that we have in technical analysis, that history repeats itself. The market moves in orderly fashion, and that everything is discounted. So if that's the case, then if we actually come in and break our support level that I've shown here, then this scenario of this drop that we had on the pre-pandemic will most likely continue. How far down will it go? Previously, it went down as low as 18,000. So could that happen? You never know. But obviously, this is because of the pandemic. But this is an important level. This is the high, so we are using it as a support level, and also the same as for the Russell. So a different scenario is happening with the S&P and the Nasdaq. The S&P is trading about 5.16% from its pre-pandemic high. Okay, and the Nasdaq is also trading about 11%, 10.5% from its high, from the pre-pandemic high. So we still have some room to move lower in the Nasdaq and the S&P 500 if the case is that we are going to come out and test the pre-pandemic high, which can act as a support. Right now, it can act as a support. So keep that in mind. All right. At the same given token, the divergence that these two are creating, okay, is very important. The Dow and the Russell are in what we call a divergence. Okay, a divergence. This is another divergence. So you start a sharp move is imminent, and this is going to get pretty interesting soon. Okay, so the crude oil being the nemesis for the market for inflation. That's higher crude oil, higher inflation. Everything derives from crude oil. So we're looking at the WTI. If we come trading above 84, 85, come back to these levels, then the movement on the indices, Nasdaq and the S&P 500 towards this is a pandemic high can be seen, and obviously the Dow and the Russell will continue to trade even lower because we are already trading below our pandemic high. On Wednesday, the OPEC Plus is going to meet. I'll talk about they're going to cut about 1 million barrels of production. So 1 million barrels is going to come out of the market supposedly. So that's something that we have to keep in mind. Keep an eye on. If that happens, we could probably see then probably a knee-jerk reaction from the market and see crude oil higher. We'll gotta wait and see. As far as for the natural gas right now is trading lower. Okay, we open up in a gap down. So that scenario of looking for Nat Gas to come down to $6 could probably happen. Let's see and see what happens. Right, we gotta when the market opens. Then we have gold. Gold right now is trading in the consolidation stage, right about our pivot point, looking to come and test out that high 1680 is the psychological resistance. Then we have here silver. Silver is looking to trade above our 52-week moving average, looking to come to the $20 psychological level. So that's something that we got to keep in mind. Now we have here copper. Copper is really looking to stay strong above 335 and see if we can hold this. The RSI is flat, so we could probably see a nice, perhaps another lateral movement consolidation into the day. Here we have the Bitcoin. Bitcoin most likely is going to trade in range between our resistance and the support, or just fluctuate around the pivot point. Then we have Euro. Euro is really, just having a hard time just to come back up to parity, trying to stay above 97, and that will be seen. Then we have the pound, or we spoke about 112 right now, trading above from the 103 that we saw early last week. 113 will be the psychological resistance, obviously. And then we have the Canadian dollar, right? So if we have crude oil going higher, we most likely see the Canadian dollar trade lower. If we see the crude oil going lower, we probably see the movement higher. That's a correlation between them two. And then we have the dollar index looking to stay above 112. The range this is the channel. This is Friday's movement. I think we're gonna stay within this range. All right, guys, that's it for me right now. Have a fantastic trading day, and I'll see you tomorrow.